GM, good morning. Welcome to the Milk Road Show, the daily crypto show wishing Solana a happy 5th birthday. Hard to believe they're barely older than a kid in kindergarten. I'm your host, Jay Hamilton. Today it is March the 18th. And since Solana turned 5, we wanted to bring on some people from the Solana ecosystem. So today we're joined by Sydney Leow, the co-founder of Drift Protocol, a leading DeFi exchange over on Solana. In today's episode, we're going to talk about the trends and market insights that Sydney is seeing as one of Solana's leading perp exchanges. We're also going to talk about the future of DeFi and where will Solana play its role in DeFi, and when are institutions coming? What do we need for institutions to join the party? Is Solana only meme coins, or is there a lot more happening behind the scenes? That we're going to dive into all of that. And then also we might talk about some investment opportunities during these choppy markets. What are some ways to get some yield in a more risk-safe way? Before we jump in, guys, if you are trading right now, you want to check out Milk Road Swap. We just launched this a few weeks ago, and it's one of the best places to swap in crypto, honestly, for two reasons. One, it's super easy, and two, the fees are crazy low. We're just taking 15 basis point fees on trades on Ethereum, and also great fees on trades on Solana as well. You can trade on both Ethereum and Solana on Milk Road Swap. So check that out if you haven't already. Link is in the show notes. Today's episode is brought to you by Definitive Advanced Trading on every chain. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Without further ado, Sydney, welcome to the Milk Road Show.
Hey guys, great to be here, and thank you so much for having me.
Excited to have you. Thanks for joining us. I know you're in New York, you're at DAS, you're running around, and you squeezed us in, so we really appreciate the time. Okay, let's start with, you sit in an interesting seat at Drift, in that you see a part of trader behavior that is a little bit different than most of our audience would see. Any shifts that you're noticing in trader behavior over the last few weeks as we've sort of shifted into market and sentiment and gone into more of this bearish sentiment? What are you seeing?
The main biggest shift we're seeing is less trading volume on altcoin pairs. A lot of the volume has shifted over to reliable majors, Sol, BTC, and ETH being the top. On our exchange, a very large majority of the volume has consolidated back in trading Sol perp in general. And so, I think we're just seeing meme coins lack volume at the moment, and we're seeing more activity in the fundamental type of tokens that have some sort of cash flow, some sort of revenue generating element, as well as some sort of utility. So how we like to see it is it's a return to fundamentals, and overall, while we're not saying that meme coins are not going to have a comeback at some point, or that speculation is over, we're just seeing a little bit of fatigue in the market on the meme coin side of things.
I mean, honestly, like that's that's great to hear. Like I
Yeah,
feel like that's a good thing. We've been saying forever that, you need to, if you're an investor in crypto, you really need to understand risk.
yeah,
And it's very hard to understand in risk in crypto because it's very easy to come in and just listen to KOLs and listen to influencers who tell you that everything's going to the moon and everything's up only, and you really don't truly understand risk. And so I think it's great to see a shift into more fundamental based tokens. Not to say, as you said, look, the speculative casino is never going anywhere. It'll still be around, and there will be another moment likely at some point this year when speculation goes crazy and everyone's going back into meme coins and going down the risk curve. But nice to see some level heads right now during this chop. Are you seeing less? So you're seeing less volume. Are you also seeing less active users, or just same active users but less volume?
users have actually continued to grow. I think a big part of it is also that with perps, you can also go the other side of the trade, right? Like you don't just have to be long. And we're actually seeing more sophisticated usage of these products where you can use perp to hedge out your positions on chain. One of the unique features about Drift is that we are a cross collateralized risk engine, and which sounds like Mambo Jumbo, but it means that you can deposit any asset as collateral, not just USDC. For instance, you can deposit Sol LSTs, you can deposit Bonk, even Drift as a token on the exchange. And at any point, you can open a hedge against the value of your assets. So let's say you have a bunch of Sol, you think that Sol is going to go down over a short time period, but you don't want to sell to incur capital gains. What you can do instead is you can hedge out your position by opening a Sol short. With that Sol as collateral, you effectively get a stable coin without needing to sell into cash. And in some cases, you even earn a funding rate on top of that, meaning you're earning the perp basis rate. I think it was floating at like 5 to 10%. So you're basically getting paid to short the market. So yeah, while we're seeing slightly less volume on the perps and leverage side, we're actually seeing more the same or even a growth of users who are using Drift to hedge their positions.
Very interesting. Yeah, this is an area of investing that I don't think our audience, and I mean everybody listening, feel free to correct me if I'm wrong, but my guess is that our audience is not doing this more sophisticated perp trading, but you are seeing an increase in this. So what would you say? How do perp funding rates act as an indicator for market sentiment? Let's just break this down a little bit so our audience can really understand.
Absolutely. Funding rates are a really good indicator for how the market is positioned right now. So you can think about it as, because perpetuals are synthetic features on a base asset, right? You have the spot Solana, which has a certain price. Let's say the current price is 120 for ease. You have a synthetic perp on top of that that is pegged to the price of Solana, but it sort of floats as a token or a contract of its own. So because it has leverage and because it's synthetic, it's settled separately compared to the spot asset. So you can think of the spot asset as a reference price and the perp as the contract that people trade back and forth. What happens in really bullish scenarios when everybody and their mom wants to go long is that they start buying up the perp in big size because it enables leverage. And so you get this huge demand in the perp side. What happens then is that it pushes the price of the perp up, right? Solana is at 120. People really want to go long. They buy a lot of perp. Let's say the perp goes to 122. So now there's a $2 difference between the perp and the spot. And the way that perps forces the prices to go back down to where the spot is, because it's supposed to be an asset that pegs to the spot, is with a concept called funding rates, where you're selling, basically the people who are long should be paying the people who are short in order to stay that position, because it's a 1-to-1 ratio of longs to shorts in the system. So you can think of it this way: if the funding rates are positive, that means there's a lot of pressure for the perp, for there's a lot of demand to buy the perp. Conversely, if there's a lot of people trying to short sell, you have more sellers than buyers. So the perp trades under the spot. And so there's a negative funding rate. Right now, for reference, the Sol funding rate is just about flat. It's been hovering between negative 10% APR to zero in the last week. So we're seeing bearish to neutral sentiment in the market. So funding rates are actually one of the cleanest ways you can determine market sentiment in the market.
And so right now, like that feels, knowing that it's neutral right now feels better than I would have expected it to feel, to be honest,
Mm.
because there is such a bearish sentiment. So you did say it has been negative in the past 2 weeks. Before 2 weeks ago, was it positive and doing well, positive?
Yeah. So funding rates were very elevated all throughout the middle of last year to early this year. So what we've been seeing across the board is a reset in funding rates. So that does give us more of a base to rinse out the people who are leveraged,
Mhm.
like very, very leveraged long, and give us a safer leverage base to accumulate from.
If you're only trading on centralized exchanges, then you're not going to make it. The best traders know the alpha is on chain. Definitive, founded by Coinbase alums, lets you trade any token on Solana, Base, or any chain all in one platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on chain. Plus, you get the best prices as your order is routed instantly through every DEX and liquidity pool, getting you up to 19 times lower fees. Trusted by funds, whales, and the milkman himself, now you too can trade like a pro. Milk Road listeners get a tasty glass of milk with zero fees on your first 25,000 at milkroad.definitive.fi. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over 1 billion in business treasuries on chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift. What would you expect to see in the short term? Any takes on where the market goes next, and do you expect to see funding rates remain low for a while here if we're in this market shop for a while?
Low funding rates offer an opportunity to accumulate at a slight discount, right? So it's
Mm.
actually a very good opportunity for users to get into position without paying a very high cost. Because you essentially get paid to be long when you're in negative funding rate environment, right? So to me, I see that as an opportunity for people to go long, and not have to pay as much. We also have the lowest trading fees in perps on Solana. So it's a great position if you're long term bullish and you want to start building up a position to hold in the future. But in terms of my takes, I do see that the market has deviated a lot from fundamentals. I think there's a lot of strong growth even when you count the decrease in meme coin trading volume. TVL has continued to go up. We're seeing stablecoin supply grow, 500 mil to a bill every single week on Solana. So we're seeing a lot of positive indicators of long-term growth. I don't see this current price action as negative to the future of DeFi and crypto. I think it's just a matter of time before the market starts to re-rate again. But what I'm very
Mhm.
excited about is I see fundamentals growing very strongly in this market.
Let's talk a little bit more about meme coins and Solana, because we don't get enough Solana builders on the show. And there is definitely a narrative in the space post
Yeah.
Libra that, Solana is only meme coins, and that's not a sustainable part of what we're building here in crypto. And therefore, Solana's taken a lot of FUD and a lot of heat for it. I think myself and Milk Road still very bullish on Solana in the long run. What are your thoughts on meme coin Solana and where Solana goes long term?
So meme coins were a really good testament to Solana's infrastructure and how it's been built. I say this because we've been building on Solana for the past almost 4 years now. We were one of the earliest DeFi projects there. And what I can say is that meme coin activity back in 2021 just would have broken the chain. But
Mhm.
today, it's been a testament to how robust the chain has been in laying out the groundwork for, a completely permissionless, entirely composable ecosystem for trading a spot asset back and forth. In some days, reaching higher volumes than their counterparts on centralized exchanges. I think we've really, what I'm very, very excited about is that meme coins have shown that Solana is very capable of DeFi and very capable of being a financial settlement layer for trading activity, which to me is the baseline of what you need a financial ecosystem to be. It's an exchange. But to go deeper, there is a big opportunity for Solana now to emerge now that we've proven the technical expertise and the ability to trade meme coins, to go deeper into what do we do post meme coins, right? This is not what Solana is known for, but these functionalities all exist today. What we're here to do is to bring a sophisticated financial ecosystem into Solana to support any type of financial ecosystem activity from meme coin trading. Then you get the cycle where the meme coin traders go. Maybe they want to park their winnings in a borrowland protocol that is giving them 5% annualized on their USDC or their SOL. It's nothing to scream about compared to meme coins, but it is a step in financial prudence, and it is a step in being able to maintain the wealth that they've generated from meme coins. And then from there, are there opportunities to invest into LP positions, strategies that can help circle money back into the ecosystem and keep TVL there. And that's what we're seeing is that a lot of meme coin traders are now becoming like hedgers and sophisticated hedgers on Solana perp. Maybe they actually want to use tools to preserve the winnings that they've gotten, right? So many meme coin traders continue to blow up again because they forget risk management. But what we're seeing on Solana is that that's not really happening. People are being prudent. They're continuing to grow their stack with the tools that we offer. And one thing that we want to talk a lot about as well is that a lot of people think of us as just a perp dex. But we've actually built a very robust financial ecosystem where you can do everything from borrow lend to looping to depositing into vaults and with the whole purpose of continuing to maintain your wealth. So that parallel is what we're seeing with Solana's growth as well. And that's what I think the next big run for Solana is going to be is that slightly more institutional flavor, slightly higher risk management to circle meme coin winnings into and give people more things to speculate on.
It's I'm surprised that you're seeing meme coin traders evolve into sophisticated practices like that. Like that's not what I would expect when we think about meme
Mm,
traders. I think about high risk gamblers that are not sophisticated investors or traders. So I mean that's a great thing if that's what we're seeing. Like that's a really positive growth for not just for the ecosystem, but for I look at it always from the perspective of the investors, the traders, the people that are using the tech, and that's great if we see that. Are you also seeing more one of the big questions that everybody has is who's going to win institutional, right? Is it going
yeah,
to be Solana or is it going to be Ethereum?
yeah.
What's your view on currently institutions on Solana? Are you seeing more institutions using Solana DeFi coming on board? Where do you think that goes?
So Ethereum does have the advantage here with a head start because it's just been around for longer. So, I think institutions have a long period of evaluation of technology and how suitable it is to deploy on. And a lot of the early institutions were not actually even using Ethereum, they were using forks of Ethereum, which, as I'll go into a little bit, I don't think is a productive way to use institutional assets on chain. I think that institutional assets should be used in a fully permissionless public blockchain space. But how I see the evolution was back in let's say 2018 or so, lots of new blockchains being launched. JP Morgan launched their own private blockchain. That was the narrative at the time. We're seeing something completely different happen in the last year or two, where institutions are choosing to build on public blockchains versus their own siloed ledgers, which are not really even blockchains. They're just private internal ledgers that they control. Having it being fully permissionless on a public blockchain unlocks a lot because now you can have freely floating treasury bill tokens, let's say, such as BITL by BlackRock, that are tradable in a public blockchain context, that trackable in a public blockchain context, and most importantly, are composable with other assets on chain. Imagine being able to sell a T bill token or buy a T bill token with USDC or with SOL without needing to go through the very onerous process of acquiring this token. So this is a huge unlock, right? And yes, we did see the trend of these institutions starting to work with Ethereum, but every single one of them have been very open to launching on Solana, and are actually launching on Solana in the very very near future. So what I would really love to see is on the institution side, continuing to tokenize more real world assets that give uncorrelated yield with crypto, getting crypto native investors
Please,
to move
please,
into,
please, more of that, please.
yeah, assets
we
like
we
market credit, yeah, tokenized real
Go ahead.
estate,
Sorry.
money markets are all sorely needed in crypto, and I'm sure your audience will agree.
And it's growing. It is growing, but it's growing. So I mean, in a way, like I think we're all excited about, and I'll use the term RWA, even though it's probably the worst term in the world, like trying to categorize every financial asset in one
Yeah.
term. But yes,
Mhm.
we are seeing great growth, particularly in private credit. As you said, a lot of growth in private credit on chain. People talk about tokenized stocks too. Like that's definitely coming. How quickly do you, do you think that's coming in? Like, and again, is it coming to Solana or is it still flowing more to Ethereum?
I think it's hard to say. I think we're gonna see. So for me, my take is that it will eventually all settle on Solana, because we have
Mhm.
the financial tools to be able to give a use case to these tokens. And what I mean by this is with our architecture, for instance, it doesn't really matter if you have a tokenized product on chain if you can't do anything with it, right? So I'm a big believer that you need to have DeFi utility for these assets in order for people to actually care that the assets are tokenized. Otherwise, I might as well just have my money sitting in an account, a brokerage account somewhere, and if I can't do anything with it on chain. So with how we're thinking about institutions is we're thinking about building out products that enable utility for these assets, namely institutional borrow lend. Imagine being able to borrow against your tokenized private credit
Mhm.
product that's yielding you 8%. You can borrow at 5% USDC, and that USDC is liquid, so you can go ahead and buy a house with that, or buy something in the real world. It's very liquid with USD, where we're also seeing applications where projects that are building on us are building things like a debit card that takes away from your balances while your balances are growing in interest. So you end up just paying in your interest. Very, very cool. We're also seeing things like using these assets as collateral with trading perps, as I mentioned. Imagine being able to deposit like a T-bill token and trade Solana with 101x leverage with it. Those things are actually possible today. And that's why we're so excited about the state of DeFi right now, is that you're really starting to see the convergence of real world assets, real world financial assets, and DeFi applications to build this perfect harmony of use case on the blockchain. Whereas otherwise, if you separate everything into their own app chains, this couldn't actually have taken place. So we're seeing a real boom of ecosystem enabled by the speed of Solana, the apps that already exist, and the new tokenization of these assets.
Mhm. Yeah, I want to unpack a few things there. First, Solana has, from my understanding from the outside, I'm not a founder on Solana, but everybody talks about the community and the support and the access to the Solana team or their wide ecosystem of people who are here to help each other out, whether it be marketing, whether it be growth, whatever form. What is that like from the inside? What is that like to feel? And then I would love to hear what are the conversations that are happening amongst these founders or amongst the team. Is there a big focus on institutions now, or is there another trend that everybody's focused on?
It's hard to say because the Solana ecosystem is so wide.
Mm.
There's DeFi projects, consumer projects, and DeFi is a category of that. Though the what I will say though is the identity of Solana is very strong. And I think that's also I think you're right to point out a couple of things like the ability for Solana founders to help each other is pretty unparalleled. And I think there's a very strong like give and take culture as well, where people feel like they would benefit from helping another person, get around. Like dev culture is also very strong, so it's like because things are open sourced, you can learn a lot from other developers that are doing like cool things, right? And we just launched also a accelerator program that helps early stage DeFi founders grow and get to the next milestone, get to their first 100 million TVL. And so there's a sense of growth and enables more growth and positive some mindset, which I think underpins a lot of what the Solana ecosystem is out there for. So I don't see too much infighting within the system. I
Mhm.
see a lot of passion, people trying to help each other. Everyone's opinionated, of course, but I think everyone understands that it's for a shared goal, and the economic alignment there is unlike anywhere else.
Mhm. I want to go back to this public blockchains versus app chains future,
Mhm.
because this is an end state of crypto that we talk lots about on the show. Is what is going to be the end state? Is the end state going to be uh, a lot, millions of app chains that maybe all funnel up to one public blockchain? What's the end state that you see?
Yeah, I strongly believe that the end state will be a single public blockchain with potential extensions on top of it to and optimizations to improve usability of an app. But composability, I think, is the major feature of public blockchains that having app chains actually destroys, right? I think we've actually seen quite a few app chains go from being apps on an L1 to an app chain that doesn't really attract a lot of TVL. And I think the reason for that is very simple, right? There's a lot of fatigue in moving stuff around. There's a lot of friction as if you're imposing. You imagine it as multiple countries going through the border to bridge is exhausting, right? Like people don't like travel. People like having things in one place. That's why places that reduce friction as much as possible win. So I think like if you compare that with a USDC transaction from my wallet to yours, if I'm trying to pay you on Solana, super smooth experience versus having to hop across so many different places. Of course, it's an argument that, hey, maybe that could be abstracted away. But I think there's a psychological sense of um, does there need to be abstractions, or can we make the underlying blockchain better so that we don't need those abstractions, right? One launch that we've done to push the growth of Solana from a tech perspective is Swift Protocol, where we keep assets on chain in a single like L1, which is Solana, and we've made transactions faster by layering on a channel on top of Solana to be able to match orders, so that we reduce the load on the blockchain while still keeping apps on the blockchain and making sure that every order is eventually still confirmed on chain. So those are trade-offs that we think about a lot. But when we look back into why build on blockchain in the first place, why decentralization, having shared decentralization across a single public blockchain is really important. Being able to say that your assets exist in one place, I think it's a huge Lindy factor versus having them travel around and trusting different validators along the way. So yeah, I strongly believe that we see a lot of growth on the L1 side of things, so that we don't need millions of options. Because I think in that
Mhm.
world, we would have failed as consumer providers.
Do you think that millions of app chains are inevitable though, from the perspective of a lot of the builders, platforms, apps will want to control a part of their experience? They'll want to control some features, they'll want to control some fees, so they will want that. And is that achievable I guess first question is, do you think that's inevitable? Because my view is I kind of do think it's inevitable, especially because there's so many Web 2 or just maybe not even Web 2 traditional companies that control a lot of the users right now that will want to bring they'll want to offer crypto rails to those users, whether it be for their own benefit as lowering cost and increasing margin, or whether that be passing on that benefit to the user. And in order to do that, they will need some form of their own chain. And I guess the question is like, is that going to be achievable? Like, do network extensions make that achievable on Solana? Or is that only achievable in a like L2 framework like Ethereum has?
So I think
Big question, I know.
points. Yeah, I completely agree on app customizability and apps owning the the customization of what they need to do. The thing is that I don't think we're in shortage of block space right now. There's a lot of block space, and there's enough chains for people to build on where even applications like ours, which are high frequency exchange, can be supported on a public blockchain. So I think for most applications, public blockchain block space to address that problem is sufficient to address. So I don't think there's necessarily like besides justifying the need for a token valuation, I don't think there's really for like lots of customized block space at this stage. Now, for highly customized solutions and for things like capturing rewards back to like the token, all of that can actually be done on a public blockchain right now. Doesn't necessarily need to have your own blockchain to add customizability, especially when on Solana you can run a validator that the ways modifies the ways that fees go to your stakers. So there's alignment between your users and Solana as a whole. But yeah, I don't think that from a UX perspective, it always makes sense for an app to launch its own chain because the benefits of being in one place is just so much higher. Imagine needing to launch native stablecoins on every single app chain possible versus just relying on that infrastructure that already exists. Imagine needing to launch bridging solution AMM on every single exchange versus using one that already exists and that has the most liquidity. I think we're very sensitive to liquidity fragmentation. Being an exchange, you have to bootstrap liquidity on every single app chain, and we just don't think that that's going to be the way that public blockchains grow. To us, that's just like millions of private blockchains all over again. So outside of a couple of big use cases, I do think that public blockchains can serve the needs of most app builders.
Hmm, hmm. And is available within Solana right now to get the customization that you would want. Yeah, I think the the big question is going to be what do those that control a lot of the users, how do they come on chain? And it was interesting to see Sony, for example. Sony launched an L2 and
Yeah.
pretty quickly made some decisions that got them a lot of feedback that maybe it wasn't a public blockchain in the way that we all wanted to see, because they were controlling meme coins, not allowing meme coins to happen on their chain. But at the same time, I also sort of understand that they
Mm.
do want some sort of control and some control of the
Yeah.
experience.
Mhm.
Anyways, so it'll be interesting to see how it all plays out. Cindy, before we let you go, any final thoughts to share with our audience today?
Yeah, maybe one final thought, which is that even when we consider institutions building on a public blockchain, there are customizations on the token level where, let's say, you can restrict like only KYC holders to be holding these tokens as a part of Solana's token 22. So I think you're right. There's a lot of customizations that are needed. It's not always a black and white solution, but having that on the chain level, I think, makes it so much more powerful. And these customizations are enabled right now. Yeah. Before we end, I think this was a really enjoyable session. If anyone's interested in checking out vaults, leverage trading, or general borrow lend, please check out Drift. I'm always online on Twitter, so feel free to reach out to me anytime.
Yeah, definitely. Just quickly give a plug for vaults, because that is the one product that our audience would be interested in, especially during markets like this when we're in chop. Like vaults are an interesting opportunity to get some yield and still stay in the markets, but maybe not have the same risk that you might have had previously.
Yeah. Vaults are our version of on-chain hedge funds. You can deposit into vaults with verified managers. So all managers are experienced hedge funds, quant strategists who are running vaults to help you grow your stack on chain. You can deposit USDC and other assets as well, where they'll help you, earn yield based on market conditions. And over the past couple of months, after our launch, we've already hit about 300 mil in TVL and generated about $14 million in PNL for all of our users. So yeah, that's been pretty exciting. If you want to invest with even just $10, you can do that on Drift, but you couldn't with a traditional hedge fund structure where most of the minimums are upwards of $100,000. So yeah, we built vaults to be permissionless on-chain hedge funds for everyone.
That's awesome. That's awesome. These are the innovations happening in this space that aren't getting celebrated enough, because it's not going to catch the narrative and it's not a meme coin that everybody wants to talk about in crypto Twitter. But these are massive innovations for the long term. So shout out to you and your team. That's incredible.
Thank you so much.
Before I let you guys go, I gotta let you know about the crypto.com card. This is one of my favorite cards to use in the space. If you want to spend your on-chain dollars on everyday stuff, coffee, flights, whatever you are spending your hard-earned dollars on, here's why I like it. No annual fees, up to 8% cash back on your crypto in crypto. So you're keeping your money on chain, you're getting your cash back, not in fiat, but you're keeping it on chain. Also a bunch of benefits like Netflix and Spotify subscription. And if you're a traveler like me, you can get lounge access depending upon the card that you have. Hit the link in the show notes to check out the card and get yours today. Thanks for joining us today, Sydney. Really appreciate your time. Thanks for listening in, everybody. Have a wicked awesome day.
Thank you.
As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.